Welcome, and here we're looking at commodities and gold. Now, what we have here, what we do know and what we don't know is that what we do know is that we've got a three-wave structure here as mentioned yesterday, and that would be a bullish corrective pattern, and that would confirm with a move above the 1250 here. Now, it would still need to move above this B wave high, this particular high here, because it can be down for one, back for two, down for one, back for two, and working lower as such here. So it would need to take out that top there to confirm it as such. Silver is obviously weaker than gold, but let's sort of see how we go with this, and let's drill in here a little bit further. So we just really need to allow it to sort of play out through here. So on the 1 hour chart, we've got as currently standing, the A, the B, and the C here. But as I mentioned, this can be down for one and back for two, down for one and back for two, because this here can also be an ABC rally here as such to this point here. If we get wave 5 here, which we should do, so up for one, back for two, the third, the fourth, and the fifth here. So we really need to allow this to play out somewhat further as such. So when we look at silver, for instance, we can see that its rise here has been quite minimal, so to speak. So we've still got this as a bearish pattern to the downside, but as I mentioned yesterday, you'd need the 1900 here to short. Now that the market's moved up here, you could come back and use the 1920 here as a retested resistance for short trades. But while it's above 1930, the top of Group 1, it's got the potential to move higher through here. The wave count that I've got here is not that clear, really. Sometimes they're clear and you can say this is that and that's that, but other times when they're a bit iffy, they need to be pointed out that they are a little bit iffy. But in the bigger picture here too, as we mentioned before, is that we can see that this is a corrective pattern across here, and at some point this low will be taken out. It's just a matter of how this will play out. They could certainly have one more move up here as a C wave and then move down, or it can just move down, continue to move down through to here. So, and the copper market's pretty bearish as well. We'd always known that it was a corrective pattern here on the daily chart, and eventually this low here would be taken out. It's just about how it's going to do that in terms of an A wave, a B wave, and a C wave here. And if that's the case, then this A wave won't be here. This will be a C wave here, and we will move making new lows through here. But I had to allow for the market to have a potentially larger correction, just pretty much same as this, doubling in size really, except that this would all be the A wave to here, ABC for the A wave, a B wave down here, and then a C wave up here. But this is really acting quite sort of bearish through here, and I can see on the intraday that it's got more to unfold through here. Under the 320 here, the levels are 318, 315, 313, 12 and 11. So with 318 as a retested resistance, it opens the door for 315, which brings it down to this area through here. So there's still more bearishness to arrive in this area through here. I won't drill in here that much. I know people don't trade this one that much, but it's still got further to go down, and it affects the materials sector, the mining sector. Okay, so the oil as well. The move down through here can also be counted in both ways as well. It can be counted as an A, B, and a C. The A wave would be to here, the B wave would actually be to here, and the C wave would be to here. So it's got a complete here as such. The other count for this is that on a bearish count is down for one, back for two, down for one, ABC, back for two, and down and further. And that can still move down further here And one of the reasons for this is that we can see that the moves up are slower than the moves down. So the moves slower to the upside, quicker to the downside. So there can be a larger picture unfolding through here. There's a series of important levels. The main numbers here, 97, 96 and 95 is a minor level, and realistically we couldn't really turn bearish until that 95 became a retested resistance. Then it would be in bearish mode. However, the 96.50 here is the halfway point between 95 and 98. And it really plays a strong role in oil. So that 96.50 there, you really need to be on the right side of that if you're trading. So if that becomes the retested resistance, then you're going to see this market move lower. So just keep in mind, it may not be the case, but we just got to keep in mind that we may have a bearish count sort of unfolding here as well. So yeah. But let's just sort of see how we go with it. But as long as it stays above 95, then we have to keep it as corrective. But I can see potential for a larger move down through here, especially when oil can follow stock as well, indices, and the bonds market is pushing up really strong as well. Okay, onto the grains and some. Few opportunities here. First of all, the soybean market here. Now, as you know, this market's been working itself into a corner, and the 1300 has been the balance line for that particular corner. And I don't know if this is a correct count just yet, but it's something that we're tracking. And on the bullish side, because we also got to remember that we've got lower highs coming through here, so all of this can be corrective and it can just fade away. But on the positive side, we'll look at both sides of the coin, because so far here we've got up for 1 and back for 2, then up for 3, back for 4, and looking for up for 5 here. If that's the case, and we follow through with an ABC, this is coming back to the 61.8% if it moves up to the 1310. And if that's the case, then it finds support here, then we'll definitely be going long from that point there, because we'll have an impulse wave behind us, a corrective wave, and then we'll be above the level, and it will be the perfect setup to move on from that point there. So yeah, that's what we'll be looking at from that point. And just on the intraday here, this is kind of what it's looking like here. So up for 1, back for 2, then 5 waves up here for the 3rd wave, back for the 4th, up for the 5th. So we've still got a bit of time with it all. Then an A and a B and a C. This ABC here can come back, back into the 61.8% sort of area through here before we see further upside. But look, at least we know this pattern. If it fails from here and finds the 1272 as resistance, then we'll look to short it again. I know we've tried to do that before, and it sort of failed through here. Never had really good retest from here, but as resistance. But anyway, that's what we'll be looking for there. So short with a retested resistance outside of group 2 here, the 72 and the 65, and long up here. Okay, the wheat market here. I think we might have a turn in the market, because we've got soybeans moving up, we've got corn moving up, and orange juice is sort of chipping away there. So it's possible that we've got a rally here for the wheat market now, and it's something that we need to put on the table. So in the bigger picture here, we've got wave 4, 1, 2, 3, 4, and 5 here. So we can get a rally if it's correct up here. And let's just drill in and have a bit of a look at that. So, we were hoping for the 550 to become the retested resistance. And it may be the case, because we were looking down at 1, 2, 3, 4, and 5 down through here, and we'll look at that in a moment. It looks like the 5th wave had been sort of truncated, and this is swept up in the bullishness of the soybeans and the corn. Looking at this here, there's a couple of ways to count this here in terms of a wave 1 to here, and a wave 2 to here, and a 3, an A and a B and a C for the 4th, and down for the 5th wave here. I was expecting one more here, but it may have to go there. This is the other count here. So we're looking for 1, 2, down for the third wave. We're looking for a fourth wave back here, and we're looking for a fifth wave to come down through here. It didn't come down, so maybe the fourth wave is still here, but as soon as it starts to overlap this wave 1 here, then we've got to rule that out, and we need to put this wave 4 here and wave 5 into here, completing the structure here. So it's not that we're prepared to go long here either yet. We'd want to be in group 2 here. This is the supply level. We want the supply, the resistance area to become the support. So that's what we need up here, but it is looking bullish through here. But let's just get it into shape first. What we mean by getting into shape, we would need to see an impulse wave to the upside like this, and then we'd need to see an A and a B and a C back, and then we can start looking at it, from this point here. That would give us a stronger position to go from. The corn market, as you know, pretty much in the same boat as well. We've been looking at all this coming down through here, and we had this sharp spike here, and off the close to the medium level here, 400. It still may be corrective. It still may be an A and a B and 5 waves up for a C wave here, and then folding over from here as well. So we need to be a little bit mindful of that, but we also need to trade what we see as well. And what we have seen here is support off the 430. So just drilling in here a little bit. We were patient here. We've got the sort of, we've waded through all of this here. So we've got this retested resistance here that's held nicely, and taking the highs out here, we're looking to build a trade through anywhere above the 430 really, and adding it at 433. So we've got a swing across here now, which we can bring at the 435 area here. So what we should see here is a small corrective pattern unfold here, and then find support and move up here. So we want to be looking to add on top of 35 support here, and moving up into 38 is going to be profit taking here. Well, it's already started here, but profit taking at number 8, and then we'd see a larger correction unfold at something like this anyway. A larger correction unfolding at 40 here. But what we want to try and do is we want to try and hold on to our positions that we've got in through here, and we won't add once we get above the 5. We'll allow the 8 to do its own thing, and then we'll look to for support after a correction on the 40 here, and then we'll try and get ourselves up to the 450 from that point if the market's going to go that way. So we need to sort of maximize that the best we can. Okay, so the orange juice as well, from the low here, it does appear to be sort of impulsive to the upside here. This can be counted as wave 1 up here in terms of 1, 2, 3, 4 and 5 up through here, or this can all just be the third wave here, a fourth and a fifth. So we need a little bit more time to establish. But one of the important things here is that we want the 140 to hold, because it hasn't been retested when it moved through here, but it's occurring now. So we may see it down only at the 141. Now, if we find support, because we've had this corrective move, if we find support on the 143, then you can certainly add from that point there as well. So looking quite chirpy on that side. All right, thanks for listening.